You're tuned to the Velocity of Money. Now with a big dose of education about your family's largest investment, here's Michael J. Barnes.
Welcome back to the Velocity of Money. This is Michael J. Barnes. I am the president of Velocity Financial. I'm also the founder of the Modification Hotline, which is modificationhotline.com. The phone number to reach us in regard to any questions that you would have is 1-888-MOD-INFO. That's 1-888-MOD-INFO. And my welcome back once again, Brett Fallon is a regular guest on the show. He is a registered financial consultant with RG Capital and AIG Financial Advisors. Brett W. Fallon, thanks again.
Hey, I'm glad to be back, especially when we're talking about such an important topic.
Well, and we like to have, it's nice to have the financial advisor's perspective on some of these things. So many people don't have a financial advisor. So for lots of people, thousands and thousands of people listening right now, you're their only option for that. Financial advisory services are typically not for the masses. But again, you're here to help, and your services are available to quite a number of people. You actually work with some of the huge Fortune 500 companies, correct?
Yeah, I do. I do a number of workshops for Fortune 500 companies that are headquartered here around the Valley, and the idea is to help people create efficiency with all assets, understanding that their home and their mortgage is typically the largest asset many Americans have. And if you're not treating that one with efficiency, the retirement accounts and the investment accounts and all the different stuff, that all has to work in concert. So I'm happy to weigh in with information and give you my viewpoints from my perspective.
Well, and we were talking just a few moments ago about utilizing an expert negotiator when trying to do a loan modification. People are getting mail from bogus service sources. We've already covered that one, but from their servicer saying, if you need help with your mortgage, help is here. Give us a call. I'm certainly not going to tell everyone in the world that they cannot do their own loan modifications, because some people are qualified to negotiate on their own behalf, though in my opinion they'll still be emotionally attached to it, and if they hear something that sounds good, that may be enough for them to essentially bite, which is exactly what the loss mitigation department wants you to do.
It goes back to that disinterested third party, that expert negotiator being a key word in that phrase. One of the things that we were talking about, I want to make sure that we address this, especially in this segment, is, we're talking about loan modifications of mortgagees, people that have some financial constraints, some pressure, whatever the source of pain is for them, knowing that this option exists to take an existing mortgage loan and modify it to their best or better interest from what it currently is. So who should and who should not do a loan modification? Let's start with that.
Well, I'll tell you, when we talk, let's start with the people that shouldn't do a loan modification. Somebody that thinks that their interest rate is too high, but they may owe more than their house is worth, and they feel that they may be entitled to a loan modification. Not really a good enough hardship, I should say hard enough hardship for those types of people, unfortunately. This is essentially a handout that's being offered because of some of the malpractices, if you will, that were happening in the mortgage industry over the last several years, with these big, huge banks offering these products, if you will, loans, teaser loans, toxic mortgages is what we call them now. We sure as heck didn't call it that then. When the consumer calls me up and says, oh, I want that 1% loan, that's going to be my ticket. Well, unfortunately, people took those loans, but they didn't realize is someday that loan at this ridiculously low interest rate was going to quadruple on them, and who on earth would have known that the economic times were going to be as bad as they are, and they would have no option of getting out of that loan.
So somebody that simply finds themselves upside down, owing more on their house than the actual value of the house, does not necessarily need to consider a loan modification.
No, they may not qualify on those merits, but in most cases, go ahead.
No, I just want to make a point. I was reading an article in the Wall Street Journal about this concept, and basically the gist of the article was that the average foreclosure on any property in the United States costs the lender $50,000 from start to finish.
It does.
So that doesn't matter if it's a $100,000 property or a $500,000 property. The cost to the lender is $50,000 on average nationally.
Essentially, yes.
So the idea of this upside down scenario, you may see banks be more willing to entertain a broader audience of loan modifications or a broader request of loan modifications based on the fact that they know that those now what we're calling toxic assets not only exist on their balance sheets, but they want to do something to avoid the additional cost of foreclosing on properties, to avoid the additional impact to our economy nationally with all these foreclosures mounting. So a loan modification may, while that may not be the case or the best ideal candidate today,
Right.
Don't throw the option completely out of the window.
No, and here, to that point, I would never tell a homeowner to stop making their mortgage payments to just so they can get a good loan modification. Because right now, today, this is today. This isn't 3 weeks ago. Okay, and this may not be 3 months from now. As of today, your servicer is not going to entertain loan modification unless you're late in most cases. Here's the situation, though. At first, you may get pissed off at that. People do, quite frankly, and they're mad at me for it. But the reality of it is what we have right now is a real problem, and lots of people that are 2, 3, 4 months behind on their mortgages. This loan modification, we're jumping into their business, we're getting the attorney involved, and getting right in front of the asset managers or the attorneys for the lenders, the servicers, to get these foreclosures proceedings stopped. They will absolutely, I'm certain that in the future, and probably even in the foreseeable future, they're going to allow people that are not late yet to do these loan modifications. Now, hold on. I said I would never tell a homeowner not to make their mortgage payment to do a loan modification. The other thing I would never tell a homeowner to do, and I mean never, ever, ever tell a homeowner to do, is take money out of your 401k to make your mortgage payment because you can't go forward. There are other stops in place. If you don't make your mortgage payment because you're having tough times, you're going to get a loan modification. I talked to a guy the other day that had a 23-year, huge six-figure income. He lost his job. Big, huge firm here in town. He's probably listening to the program right now. This guy drained his entire 401k, and I mean a big one, just to make his mortgage payment.
And the average 401k participant investor, they don't understand the ramification of what that is. Just because your company's plan allows you to take a loan against a 401k, for example, doesn't mean it's the right thing to do. There are ramifications beyond the scope of our time in this discussion regarding that decision. Loan modification first. If you're taking money from a 401k to make a house payment, you are not only inefficient in creating the velocity of money, you're costing yourselves in penalties, taxes, a number of different ways. That is something that we can be certainly forthright about discussing with anyone that wants to call 1-888-MOD-INFO for information.
Yeah, and well, in this particular consumer's case, it's just heart-wrenching. This poor guy used up every bit of his 401k to make his mortgage payment because his lender told him no, no, no. Well, his lender told him no 3 different times because you're not late, we're not going to help you. Well, he wasn't going to allow that to happen. Unfortunately, knowing what he knows now, well, he probably would have looked at it a little bit differently. A loan modification isn't for someone, if you don't have any income at all, the investor, the servicer, the bank that holds your mortgage, they're not willing to do a loan modification because you don't have the means to pay for
even if it's a modified loan, you still can't make the
modified. Right, right. In some cases, if you have significant cash reserves, maybe, but I've not seen one of those done.
Yeah, that wouldn't be the ideal candidate. Describe a little bit about who should be doing this loan modification. And I know we're getting close to a break here again, but people need to know that this option exists. They're hearing all these different concepts in the news, and they're hearing the media spin about Hank Paulson and what the Treasury's doing, and they're hearing about this bailout package and what that represents, and now they're hearing that that money's not going to be used to buy back bad mortgage assets. So what does that do to the underlying holder of that mortgage, the owner of that house?
Well, it's pretty scary for the majority of them. The loan modification, the lenders are getting very aggressive when being forced with a potential lawsuit or being addressed by an attorney or receiving a subpoena in regard to a specific loan case. They're paying attention to that, and those are the people that are going to be getting the best options at this time. Those are the ones that are working the best.
Somebody feeling this economic pressure, they may be behind on a mortgage payment or 2, maybe 3. What do they need to do? What's step 1?
call 1-888-MOD-INFO. That's 1-888-MOD-INFO, or go to modificationhotline.com, and we'll be back in just a few moments.